Hello everybody. So I have just created a miner valuation spreadsheet. That spreadsheet is a little different from what you'll see on the internet from the main analysts for Bitcoin miners. I do things a little differently here. The way I'm assessing this spreadsheet, I'm only looking at it in the form of a quote-unquote book value, if you will. I'm looking at it as what is the value of these miners if they were to resell everything. If you were to resell all of the assets, what would be that value of that miner? That's the first assessment that I make, which is why I use three tangible things. I use the hodl bag, right? How much Bitcoin they own on the balance sheet. I use the value of the rigs, the value of the mining rigs on the balance sheet. These are fungible items. They can resell those. And then I use the value of the real estate. In this spreadsheet, and it's important to point that out, I use enterprise value too. I don't use market cap. Why do I use enterprise value? Because in enterprise value, you add the debt against the company, right? In the market cap, you include the debt. So the market cap may look lower when you add the debt back. Enterprise value is higher. And of course, you also give credits to the company for the cash. So you subtract the cash. So when you see this, you can assume that debt and cash has been taken care of as far as the instant picture valuation of the stock goes. And I just want to point out that rigs value and real estate value, as I'll get to it in a second, that's approximative. Bitcoin value is of course, I use 58,000 here. It's roughly the price. This fluctuates and you can change based on the number of BTC held. If you would look at this video later on, you can just readjust and recalculate that. I want to point out that the value of the rigs is highly correlated to Bitcoin's value. Of course, the value of the Bitcoin is correlated to Bitcoin as a 1, obviously. And then the value of the real estate, well, that's correlated to the AI/data center/industrial space value. And that's also correlated to the cost of electricity that they pay. But that real estate that they own has value. So let me walk you through the spreadsheet. So the first point, of course, is the Bitcoin held. These are all of the Bitcoin held, and you can see the percentage of Bitcoin each of these miners hold. If you're curious which miner's enterprise value is made up of the most Bitcoin, it's actually HIVE 8 followed by HIVE. These two miners have, one of them more than half of its enterprise value composed of Bitcoin, and one of them, close to it at 43%. RIOT is the third player here. So these companies have a lot of enterprise value explained by how much Bitcoin they have, and in fact, HIVE has half of it explained by how much Bitcoin they have. Easy calculation here. No need to spend time on that. Now, I want to spend a little time telling you about the rig value. So when I did my independent video on Cleanspeark, I used the cost of S21 miner pros, and Cleanspeark discloses how many S21 pros they own. So you do a simple multiplication based on the sell price, and I arrived at a certain conclusion in that prior video. This time I did it differently. This time I valued the cost of the exahash total, because not all miners have a uniform type of mining rig. Some of them have plenty of different ones with plenty of different efficiencies. So I used exahash. Exahash is a more fair comparison of all of the miners. And in 1 exahash, you have 1 million terahash. And the key then to calculate the cost of the rigs that they own, of all of them that they own, is what is the cost of a terahash? How much would you pay for a terahash? Well, for that I use the industry standard. The industry standard right now is the Bitcoin miner, the S21 Pro. That's the industry standard. And it is for sale for $6,318. Keep in mind, these prices are adjusted based on the price of Bitcoin. So brand new, that's the sell price, right? So how do I come up with $27 per terahash? I take the sales price, $6,318, and I divide it by 334 terahashes. And, don't forget, many of these miners operate at higher level than that. They overcloak the device, right? If you follow Cleanspeark, they pride themselves on overcloaking their devices by 10 to 15%. Many of these miners are experts at what they do, and they overcloak overclock these devices. So you could get for 250 terahash. Also keep in mind, and this is not a minor point, they're sold out, right? If you click on buy now, they're sold out. It's not like you can get one right now, one of these, right? So these machines are sold out. So you could argue, oh, these miners are old, and they would definitely go less than $27 per terahash. But you could also argue, well, wait a minute, they would perhaps go more than 27 per terahash. Of course, if everybody started selling their miners, their mining rig at the same time, the cost per terahash would drop. But that's true of any market, right? When anybody sells at the same time. So theoretically, I'm going to take a theoretical value of $27 per terahash. And so at $27 per terahash, for example, for Cleanspeark, that's $610 million is the worth of the rigs. And so that would be 29.6% of the market cap of Cleanspeark can be explained by their rigs. And I do the same calculation, assuming $27 per terahash, and I take the exahash number, right? 1 exahash has 1 million terahash, and I calculate the value of their rigs. So you can see Marathon nearly has $1 billion worth of rigs. RIOT just has under $600 million worth of rigs, and then we have smaller miners, you know, and you can see in the market cap, right? You can see that for RIOT and for HIVE, you know, 40 and 44% of their market cap is made out of their mining rigs, right? And you have some of the ones who are less good at that. Like for example, HUT only 14% of the market cap of HUT is made by the mining rig. So you feel free to add these two numbers up to get a look at the Bitcoin derived miner valuation, right? And then we need to kind of assume the salvage value of the entire Bitcoin mining company. So what would that be? That would be the hodl bag, how much Bitcoin they have. That would be their rigs, the value of their rigs. And then that would be their real estate. And this is the toughest one to evaluate. So for real estate, I simply extrapolated from Cleanspeark, and Cleanspeark is a well-run miner, so this might look upon more positively upon some of these other miners. These might make some of these other miners look good, but then again, I'm biased, right? If you follow another company, you may say my company that I follow has a much better efficiency, and so we should use the value of their real estate. In this spreadsheet, I estimate that per exahash, right, based on the Cleanspeark number, per exahash, you need about $14.8 million of real estate per exahash is what I calculate, and that started with Cleanspeark. Cleanspeark has 22.6 exahash where they deployed their miners, and it's $336 million of real estate. So you do a simple division, you know, 336 million of real estate divided by 22.6, you get $14.8 million worth of real estate per exahash. I want to point out that I think that's in the ballpark, because 1 exahash, you know, just for fun, is about 5,000 to 6,000. Think about that. 5,000 to 6,000 of these machines. If you've ever seen one of these machines in real life, you know that these are not small machines, and you know they need to be cooled. These machines, they need to be powered. You know, right there, this is 3,500 watts. That's your washer and dryer running together at the same time, worth of power. Right? And so think about that. Each industrial site, you know, for 14.8 million, I assume there's 1 exahash. So that means they own 5,000 to 6,000 rigs, and they need the power, they need the transformer, so they need the cooling, they need the industrial space. They also need about 18 to 20 megawatt to power 5,000 to 6,000 mining rigs. So we're talking about heavy industrial building, as well as data center, kind of this hybrid between data center and industrial building. Well, a data center is a form of industrial building. So if I use this $14.8 million per terahash of real estate assumed, then I get to these numbers, and you can see Cleanspeark, HIVE, Bitfarms, RIOT, they all shine through their real estate. And they have a lot of real estate, and some companies have way less, like HUT has way less real estate. And so when you add it all up, you see, you get to a different result. You know, HUT, if you're looking at how much Bitcoin is held on the balance sheet, right? HUT looks the best at 51% on the balance sheet being Bitcoin, right? But they don't necessarily look as good on the mining rigs, and they definitely don't look as good on the real estate. So you're buying very little correlation of the real estate to the AI/data center space, and you're buying little correlation of the value of the mining rig. Keep in mind, mining rig, they're correlated to the Bitcoin price, right? If Bitcoin is at $150,000, Cleanspeark is not sitting on $600 million of mining rig. They would likely be sitting on 1.2 or 1.3 billion of mining rigs if Bitcoin doubles or triples, because the mining rigs mine Bitcoin, right? So the value of a miner increases with the cost of a commodity, the price of a commodity that the miner produces. That's very logical here. So you can see a HUT doesn't look as good. What are companies that look very good holistically? If you add up everything, so you add up the hodl bag, you add up the rigs, and then you add up the real estate, what do you get? You get a company like RIOT, and you get a company like HIVE. These two companies seem to be trading at an enterprise value that is less than what I come up for the valuation of their three main sellable today assets, right? So 112% for HIVE, for example. So if you add up the hodl bag, if you add up the value of the rigs, and if you add up the value of the real estate for HIVE, you get at a stock that is trading, less than 112%. So in other words, you're buying 112% for 100%, if that makes sense. So it's roughly 12%. Well, it would be slightly different than that, but you get what I mean. It's undervalued, right? HIVE is probably about 10% undervalued, because for $320 million, for $320 million, you're buying $360 million worth of Bitcoin, miners, and real estate. The same is somewhat true for RIOT. The same is not true for the other miners. And so that is the premium that is placed on an astute management team, right? When we have that difference and between the enterprise value and what I calculate as the enterprise value of the sellable asset, that's that premium. You pay for the astute management teams. You pay for the upcoming growth. You pay for the cheap electricity contracts. That's what you pay for if you buy a miner whose enterprise value calculated here is less than 100% of the enterprise value that the market tells us. So hopefully you find this spreadsheet helpful. This was not investment advice. This is not financial advice. This is just entertainment. I appreciate your likes, I appreciate your subscribes. Thank you for watching, and have a wonderful day.